Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix.
Marco, how are you, man? You ready?
Good. Yes. How's everything?
Good.
So what you've been reading up on?
I just had some. I actually wanted to start off today with two actually good articles. One is an article on. We'll start with the first one. It's on climate change. It was on CNBC. I thought it was really interesting. So essentially the gist is that there's this group of investors around the world that are thinking about climate change and thinking about affecting change within the corporation. So through their dollars. So they vote by buying stock, you're voting on a company. And I just thought that the article on CNBC was really interesting. And it talked about BlackRock having $7 trillion of assets.
Wow.
And just starting to get into the voting process, if you will. They were just starting to act since July. 8 out of 9 votes that they work for in their stocks, environmental proposals, they basically voted in the affirmative way. And it shows that perhaps they really are starting to use their vote. In the beginning of the year, they weren't. So in January, Larry Fink, the CEO of BlackRock, came out and said that climate risk was the new investment risk, and how BlackRock was going to vote and force companies to sort of look at climate change as a real risk to not just the corporations, but to society and the world and whatnot. And it's interesting that they're now starting to pop up in the votes. What's also interesting that I read was, as a fact, Vanguard and BlackRock alone, just these two companies, Vanguard and BlackRock, could take votes up from 10% to 40%, right? So why is that important? BlackRock did a study that said if 30% of the votes are reached in the affirmative, then management does make some changes. Okay, they do actually listen. Okay, what's interesting is that if it reaches 50%, then management fully meets the expectations more than 90% of the time. Wow. So think about that. Vanguard and BlackRock together can add almost 30% of the votes. And they own every stock, so they can add almost 30% of the votes. And they've done a study that if 50%, that 50% is reached, that level is reached, then companies sort of say, you know what, our shareholders want this. We have to make change. We have to do something about it, and we have to change the corporation policies within the corporation around this climate change initiative. Okay, so that was interesting. BlackRock is 7 trillion. There's 9 trillion in assets represented in what's called you can actually look it up, the Net Zero Asset Managers.com initiative. This on this website, so I'm looking through it, and there's some big players. They have $9 trillion in assets around the world. So you had 9 trillion plus Larry Fink's BlackRock 7 trillion, you got 16 trillion. I'm not sure Vanguard's in there. So you got a lot of money. Wow. That is actually going to push stocks. So then I thought, why is it that they're excited that BlackRock's going to start doing this now? And then it hit me to think that there's obviously some of these stocks have gone up tremendously. So I looked at, the way my mind works is why, the question is why now? So let me show you, let me try to share my screen and show you what I'm looking at. So let's look at Chrome application window. Let's look at that end phase. So share. Tell me if you could see can you see my screen? Okay, so I'm looking at, I just went to NASDAQ.com and I looked at end phase because this stock went from, it's a name I watch, it's gone from 40 to 140. And BlackRock and Vanguard are going to be up on most of these. But what's interesting is that they changed their position by 40%, and I'm sure the quarter before they had changed it by probably we can dig and figure it out, but I'm sure it was about another 4 million shares. So they've been growing this position, and now they have a substantial position in ENPH. And it made sense to me that they wanted to buy the stocks first, right? They wanted to, before affecting change and making these companies go out and essentially buy products from this, these types of companies or make that trend happen. They wanted to buy the stocks, which, in a way causes a trend anyway. I just thought it was interesting that they were actually, you follow the money, right? They're actually buying the stocks first.
Right.
And come July, they start with this, okay, well, now we're going to really start voting, right? So it took 9 months for them to actually get into all these stocks. The stocks have all exploded, and it's a real trend. It's more and more people getting in these names, and now they're going to vote with their voice, with their shares, and really try to force these companies to push to these products or whatever it is that, whether you got to change a factory, whatever it is. I thought that was an interesting read, and I thought to myself, this is why we read the earnings reports and hear the CEO speak. This is why, when Larry Fink speaks, he has $7 trillion in assets behind him. If he thinks these stocks are going up and he's going to buy them, the stocks are going up. It doesn't matter. Right. It's not going to matter what anybody else thinks. It doesn't matter. Hedge funds don't run the market. It's really the big guys. And this is obviously a big trade, a big trend, and something that they're buying. So you have a lot of support for this trend, even though these stocks have gone up so much. So you got to be very careful because they tend to protect their stocks, right? And I think that again, if the smart, I would have been smart if in January I said Larry Fink is going to buy all these things are all going to go up 3-4 times. I missed that. I didn't actually catch that. I'm looking at it now going, wow, he actually said it. And BlackRock was actually doing it, even though they weren't actually voting the way, people thought immediately was going to happen. They wanted to get into the stocks first. So I thought it was interesting. That's the first thing that I want you to take a look at. And the second one was a zero hedge, little positive and negative, little dose of both. But the zero hedge article was talking about potential S&P for sale here into the last few weeks of the year. I thought it was interesting. They mentioned 3 things that can cause some pressure on the market, and that was one, this just quarter end rebalance. So we always talk about the at the end of each quarter, end of March, end of June, end of September, there's this rebalancing act between the big guys. Okay, not the Larry Finks, but more of the pension funds, more of these 60-40 funds, which 60-40 means it's a fund that essentially holds 60% in bonds, 40% in equities. And at the end of each quarter, sometimes at the end of each month, they rebalance. So, at the end of November, we were looking at a potential rebalance because in the quarter, there was a big move. Did that happen? Did it not happen? It didn't look like it happened. The stocks never really pulled back. Maybe they were just waiting for the end of the quarter. If that's the case, JP Morgan in the end of November was saying something like $150 billion for sale. And that was in November. Things haven't changed much. The market is up about 10% in the S&P and down 2% in bonds. It's a big number. 12% for this group is a very, very big number to rebalance. So potentially that is something that that's interesting. He has it 150 billion, maybe it's 100 billion. The second thing was the Georgia Senate runoffs in January, first week in January. It's a risk-off situation. If the Democrats win, it affects policy. If the Republicans win, maybe the policy, right, the policies that the Democrats want don't get put into effect. So there's that going on. So people generally will reduce some exposure there, wait for the answer, and then figure out where the chips. Exactly. So that's something to keep an eye on. I don't know how much money that would be, but it could easily be that people just pull off a little bit or, buy some puts or whatever in front of that. Who knows? But that's something to consider. The third thing that they said that I didn't know, and I'm not sure many people know, but I didn't know, and I thought it was really interesting, was that in the CARES Act of 2020, there's a section something. There's a clause that says you're allowed to take out money from your 401k, and you don't have to pay the 10% fee that they charge on an early takeout or early withdrawal. And they're also this is interesting, they're also postponing or allowing you to spread the taxes you would owe over 3 years. Okay. So they're trying to give people the chance to say, these were your savings. You've done this over the course of time. You know, we usually don't allow you to take it out before 59 and a half years old. And now you have this opportunity to not get taxed. People might take that opportunity because who knows what happens. You know, there's always this idea that the government will eventually confiscate they call it conspiracy theory or not, but there's an idea that the government ultimately at the end of time, the government will go bankrupt and they'll go.
And we need it,
and we need money. The government needs money, and 401k will be taxed at 80%. So basically, have taken your whole 401k.
So you think not a lot of people know about this?
I don't think a lot of people know about the CARES Act 2020, where people could take out their money. So that's helpful to people if you wanted to know to take out their money. That was on Zero Hedge. I'm getting it from there. I didn't know about that. I thought that was interesting. And you could spread the taxes over 3 years, and you know, you basically take out your money. So that's interesting. But if you take out your money, what does that mean? A lot of these are in index stocks like S&P 500. That could be a big withdrawal going into the last few weeks, because people want their money. You see these food lines. There's no food. You know, people in the United States there's a certain class that, and now it's most of them, you know, middle class is under pressure. That's something to think about. That's one thing. The last thing I would say, didn't even include the S&P 500 rebalance with Tesla this week, which is could be 65 to 75 billion. So if you really want to know how strong this market is, we're going to find out in the next 3 weeks. You know, how much can it absorb without going down, you know, I don't know, 5, 10%. I don't know. I don't know what the number is, but this is real dollars potentially coming out. What happens? No idea. Okay. So I just wanted to give you those two things to make sure you take a look at and you're reading up on that. We have some earnings this week. We have Disney on Thursday, FTX. Actually, Disney just came out with numbers last week. Or at least some subscriber numbers. Excuse me, last week. So I got to look to see what that is. FedEx, I know that is Thursday, and then Friday looks like Nike. What I read. So that's something to think about while we're looking at the unusual options activity. And then there was a deal. What is AstraZeneca bought out Alexion, 45% premium. Stocks up obviously big this morning. There was other rumors in some of these software names and cloud names. Dropbox you saw on Friday, they were up after hours. They're still up a little bit today. We'll take a look about that a little bit later. And yeah, I think we'll start with Fridays. Some stuff that I saw Friday that
Twitter,
I'll keep up.
Snapchat.
Yeah, exactly. We talked about that on Thursday a little bit with that announcement. And I mean, you're better at explaining some of this technology to me, but essentially the way I see it, Twitter and Snap are going to integrate their platforms, and I don't know, you tell me. So I
mean, been a long time coming. You know, it was a surprise didn't come sooner, but yeah.
Is Twitter going to do that? They said that Twitter was going to do that with
Instagram as well. I think they mentioned.
Okay, so that was interesting. You see Twitter. I mean, let's look at the Twitter chart. You know, the Twitter is. Let's go over here. Where are we? Twitter. I mean, this is. Let's do this first, and then we go Twitter. So Twitter by the day. You know, my belief, and I've written about this a million times with our members, but and I've told you this, I don't think earnings matter as much on these particular stocks right now. There's this ad focus on Snap, and I think it's eyeballs. I think ultimately it's these assets: Twitter, Snap, Pinterest, now Etsy. They are strategic assets ultimately for someone who's going to take them. I don't know when that happens. I don't really care that Twitter, you know, misses by $10 million or 20 million, and advertising might not be working now. Maybe it works later. To me, these things are going to trade on how much are those worth to the highest bidder, right? To the highest bidder, to the big guys. And, you know, the stock dropped here. it's come all the way back. The announcement was made here. It's reached its sort of high again. Can you see this, by the way?
Yes,
Can
yes,
you
yes.
see? Can
Yep,
you
yep.
see my movement of the thing?
Mhm.
Okay.
Yep, yep.
So it's reached its high again here at about 53. Had this big move here. You know, had a move. Okay,
Mhm.
had a big move. The next day, Friday, it came down off a little bit and then rallied back, closed, you know, above the previous high. There was also a lot of activity. So in Twitter specifically, there were buyers all over the place in January, March,
Mhm.
June, July, the 55 to 70, 60s to 75s in June and July, all over the map, Twitter call buyers in large size. So people either are getting out of the stock and buying these calls,
Okay.
or they are just trying to leverage their position because they believe Twitter is an incredible asset, and eventually this is just going to be super bullish for their members, right? So if they
Mhm.
can tap into all the people that were on Snap and not on Twitter, then that actually makes Twitter more valuable because they have more members,
Right.
period. Right.
Mhm.
So it goes back to the same thesis that I'm saying that I believe in, that more eyeballs makes Twitter more valuable,
Yes.
regardless of the advertising dollars right now. At some points that will be monetized by whoever, whether it's Twitter or someone who ultimately buys Twitter. But eventually you got the three guys in the 3-horse race of Snap, Twitter, and let's call it Pinterest.
Mhm.
And then you got Etsy on the side. Etsy a little bit more of a retail shop, but it's like a Pinterest, a souped up Pinterest.
Similar audience.
Similar audience, yeah. So
Mhm.
I would say, but I would say that the ones people look at are let's call it 4: Etsy, Pinterest, Twitter, and Snap.
Mhm.
So I would keeping an eye on these names. God, I'd love a pushback, a pullback on some of these names, but I don't know if we're gonna get it. It's like a pipe dream now.
Right.
Let's see, what else did I see? Oh, so there's names that I saw on Friday. I wanted you to write these down too. KTOS, KTOS. You
Mhm.
know, this is small call buying, but it's sporadic. This is not something that trades a lot. Popped up on the board. They do next generation drones.
Mhm.
They're always up for this Skyborg. They're in competition against the big guys, Skyborg Vanguard program being done by the Air Force Academy. It's a big program that ultimately this is going to be billions of dollars of government contracts.
Mhm.
But right now they're just trying to figure it out, I guess, who's going to be the main providers. But you have Boeing. This is interesting. You have Boeing, Northrop Grumman, KTOS, KTOS, and some private firm. I don't even know who it is. One of the stocks that is not on that list that you would expect to be on the list is Lockheed Martin.
Right.
So Lockheed Martin is one of the biggest defense companies in the world. It's not on that list. And in July, during an interview with Bloomberg, the CEO James, I don't even know how to say his last name, Taiclet, CEO basically said that they were focusing on pure play defense companies.
Mhm.
Okay, stock had a lift there. Let's take a look at KTOS here, just to show you what gets me excited here a little bit. I'm going to do a weekly. Let's do a weekly chart. Weekly. Okay, so KTOS weekly. All right, here we go. So you had this huge run up. This was a big run up, obviously. Stock
Mhm.
dropped here. It looked like the CEO was out there. This is sort of when we were getting involved in the stock. The CEO was out there really pumping the stock, and really he was in like 3 conferences in a row and like 4 days and talking about the stock and how
Mhm.
they were winning contracts. They had hired a guy, talk about nepotism. They had hired a guy like right around here. And then all of a sudden they started winning all these defense contracts,
Right.
so what does that say? But they hired a guy, and all of a sudden they started winning all these defense contracts. Probably had a cousin working in the defense department, and then the stock dropped. The earnings weren't that great. These things take time. The cyborg thing was going on. They ran into COVID, and now it's starting to sort of get back on its feet a little bit here. You can see this is a big level, 21. You can see it going back
Mhm.
sort of over the last year and 18 months. So this is a level I'm watching. It did break out here a little bit. Again, it's a small stock. But on Friday, I did see some call buying here, and I just think it's one to look out, just because Lockheed Martin could potentially be someone that comes in and eventually scoops it up. It's only a $2 billion company. Obviously, Lockheed Martin's a hell of a lot bigger, and if they are, this is one of the only public pure play small defensive cap names. So something to look at, something that is on my radar. Lastly, I would say took a look at two. So keep in mind, again, we're always, I want to make sure that you understand that we're always just looking for stories, looking for stories, looking for volume, looking for unusual options activity, to keep it in the back of our minds, and to put it in, down on paper, and to come back to it when it comes back to levels that are what we think are the right entry levels, right? Because it's important to understand that these things go up and down, and ultimately, we don't want to chase every single unusual options activity trade out there. There's a lot of them. Doesn't mean, that we're going to know everything about each of these trades, or we should follow all of these trades. It's almost impossible to follow them. So we're trying to find our spots, see what's out there, and figure out what the story is, and then and try to manage when we're getting in. And here's there's LPX, which we'll look at in a second, but I want to look at the KTOS one more time, just to give you that. Buyers show up here after a $3 move, $4 move. I'm not super excited, because I don't know whether or not they actually sold the stock. Maybe they bought stock right around here, which they were buying stock as recently as over here in let's call it October-ish. There was some buyers right around these level. 1920 comes up here. It's very easy for someone to say, let me just buy some calls and sell stock. I don't want to be the person buying the calls with them here, just because they've gotten out of all their stock. So then it's not as bullish as someone just saying, I want to buy calls right here, right now.
Right.
Okay. Now it gets back to this sort of what looks like a little bit of a breakout level over. This is obviously the bigger breakout level, but this looks like a pivot point, if you will. 21 gets down to 21, and then I see call buyers again at 21. I'd probably get more excited here, right? So I know they were buying here. I get more excited here if they're either buying more, or it seems like they're either buying stock. You see volume on the stock could go up here. So that's how I think about it and look at it. And that's why, even though I say KTOS, it doesn't mean that, we're out there buying KTOS right now.
Right.
LPX was also something to take a look at. The breakout looks like a clear breakout here at around 33, 34. You see this thing just took off in the last 4 days. On Friday, there was call buying in LPX. Again, 27 to 40. I'm not excited about just jumping in
right now,
because I see unusual, right? Just because I see it's not the ticket to say, let's go get them right now. Sometimes it is. Most of the times when, you can probably, over the long term, you probably get hurt chasing a lot with unusual option activity, because it's more likely that you are going to hit on something where someone is actually getting out of this stock and buying calls just because they want to keep some upside. And we're trying to avoid those situations. So that's important to understand. So this, now you get me back to 33, 34, right around here. And I see call buying again in 34 range, 35 range. I'm looking for that pullback next leg up, right? Pullback next leg up. So this is LPX, call buying on Friday, something to take a look at. And the last one from Friday is FEYE. Sorry, I messed that up. Let's just look at FEYE. Okay. This stock has been in a little bit of a downtrend here for a while. People have been wanting this stock to go up. Cybersecurity is a big issue, has been a big issue through 2020. This stock is not moving with what the story would have you believe it to be, the opportunity to be. The market has found other security names that they like better. This one has always been a potential takeout name. It was trading well, so it traded down sharply here. Yeah, here there was a hack. This was actually last week. There was a hack, and the stock got hurt. They got hacked. So it's a cybersecurity company that got hacked.
Wow.
Probably not great for business.
Right.
And so the stock is down. But coal buyers nibbling here. I'm looking at it. I like to, I want to see how it reacts, and I'd like to see bigger buying. Say if this starts rounding out, gets to about this level, be about 14.5 a month and a half from now. I'll be watching this to see if it can try to break out of this. You could see it's like a triangle here where it's going from highs along this way, just to, again, it's, I'm acting like a third grader, just trying to draw lines to see it, to visually see it, and to say, okay, this is sort of where we're at. Obviously, this seems to be some sort of for whatever reason, a level where big volume, support. Over here comes back, support, breaks through because of COVID, comes back, breaks through. It's fighting around this 13.5 for 3 years now. And now it's on this, however you want to call it. If you go back in time, this was a much higher stock. So, it might be considered bearish. It's making lower highs. So I would like to see it. It looked like it was about to push up. So I was getting excited to say, okay, this is finally a stock that people are getting in, and then they get hacked. So funny the way things happen. It happens right at it gets hacked right at maybe the guy's short, gets hacked right at the hacker is a short guy. I don't know. So it just happens right when the thing's about to break out, and now it's back to this level. So something to look at. It's in the back of my mind. I have 20 or 30 of these where I'm trying to figure out what the story is and find my spots, even if it's not today. We're taking a look at it. Okay, so that is and
that's the same thing to keep in mind as with the climate change stocks and things like that. Whenever we're looking at stuff,
exactly.
That story is really good.
Exactly. So BlackRock's in. What they're doing. You understand that the voting process is coming in January. Something to keep in mind. Something to make sure that you are thinking about. And as when you're trying to short a stock that BlackRock is buying, it's not good for business. I can tell you that much. You're probably going to lose, right? To catch it, and to they just have too many bullets. It's when they're maybe easing up on the names. That's sort of when you might want to take a look. Okay. So let's take a quick breather. We talk about. We'll then jump into this whole thing. What do you have any questions? Anything that you want to ask?
Yeah. Okay. So I think that's a question on a lot of people's minds is, you oftentimes mention that your education is the best education, best options education out there, and that the options education has failed people. And in the end, they're just left guessing. And last week we kind of talked about, guessing. I think it was with the AAL stock that we're talking about. Maybe you mentioned that. So I just wanted for you to elaborate a little bit more about, what OptionsGeek is really all about, and what we're doing here, how we can supplement all of that.
All right. Look, at the end of the day, I'm just trying to sell the education. No, I'm kidding. I think it's the best education. I spent many years building it. I know what's out there. I've taken the best education in the volatility space with O'Connor back in the day. My career started with education, so I have a strong foundation on education. I'm a believer of education. I see the problem. See, education for me starts with a problem. What is the problem? The problem is, and all my videos say this, is that there's a mismatch between the education and the average investor. What the education offers and what the average investor wants. There is a problem with, not saying that you can't make money selling options, but there is a problem where people are just, it's a blanket statement that when you use options, you have to sell them. It's just not true. And it's frustrating to hear that over 25 years when I'm in the business dealing with the top guys in the world. And, it's clear they're buyers of options generally. Okay. Warren Buffett isn't, but for the most part, the big hedge fund managers, the guys you see and read about in the newspaper, they're using options for leverage, and they're using options when they can leverage an idea and leverage the risk reward on their analysis. This is something that is interesting to me, because you have you have the retail environment that is just where all the average investors are, and you have everyone saying you have to sell options. And then you have the institutional environment where I'm sitting there and all they're doing is really trying to buy options to get a lot of leverage. Right. And I sat in a seat for many years trying to understand why and how are they actually buying options, because they were doing something different than what we were doing within the investment bank. And so when you're when you're on Wall Street within the investment bank, you think everyone's doing it the exact same way you're doing it. So it becomes very difficult to think outside of the box and think, wait, how are they using it? Right? How exactly are they using it? How are they, nobody thinks to ask the question, how did you actually pick that option? How did you had a choice between this one, and this one, and you chose that one. How did you actually do that? By nature, that's who I am. I'm always asking the how and the why and the simple questions. I'm not afraid to look stupid and say, can you just explain to me how you did that? Right. And it turns out to be that that's the most difficult, question to answer in options. And most people don't know how to answer it. And then you have a lot of people saying things that are frankly wrong. They're just absolutely wrong. And it's about time that the average investor gets, at least I'm trying to give the right information. I'm not saying that I can pick stocks better than anybody else. I'm simply saying that this information that is out there is not complete. In fact, it's not only is a mismatch, I think it's misdirected, and some of the statements that are made are wrong, flat out wrong. I'll give you an example. Over the last 2 years, someone has been saying you got to buy the 70 Delta call option. If you like a stock, you just go buy the 70 Delta call option. That is 100% wrong. How can, if you actually sit back, most people probably think it's wrong or think, why is that the case? But you never get an answer. But I'm here telling the world that that's wrong. Whoever's saying that is wrong. It's not. It may be right in certain instances, but you can't just make a blanket statement. How can the 70 Delta option always be the right option? It just doesn't even make sense, right? Options. There's 30 different options to choose from. Marco has his own opinion on where the stock is going. And so each option is going to have a different value for Marco. That doesn't mean it's going to have the same value for me. Okay. So when I'm looking at the options board, what matters is where I think the stock is going. If we're talking about the same time frame, what matters is where the direction, where it's going, and my confidence level versus your confidence level. We're not the same people. And that's what makes a market. Now, the question is, how do you actually do that? And so my education explains the concepts behind it, and it really relies on mathematical edge. And mathematical edge, if you play any probability game, and make no mistake, options is a probability game. But if you play any probability game, the only way to win a probability game is through mathematical edge. Whether it's everyone knows heads or tails, right? You wouldn't play heads or tails if you were losing 2, winning 1. We know that. That's easy. Right. Mathematical edge wins at poker, and that's a dynamic. That game is very much like the market. It's a dynamic probability game. Backgammon is a probability game. You win with mathematical edge, making decisions based on mathematical edge. And so that's the way you win a probability game. And I've taken that concept for the first time, really, and infused that into options, specifically the options chain, and made sense of what's actually transpiring when the top guy in the world is actually looking at an option to buy. They are masters of risk reward. In essence, risk reward is mathematical edge. I'm trying to calculate how much the stock can go up, how much it can go down, and what are the probabilities of it going up and going down. That is by itself mathematical edge. And so these are concepts that are at the forefront of a top 1% thinker, yet the most important tool that people use, the options chain, there's no interaction with the actual user. So the user is left to think for himself, right? What that options chain is showing you, what it's showing Marco is, this is what the market thinks, right? Now you have your opinion.
Now, what do I think? How can I?
How do you now put it together? That's the magic of what I built, the new options chain. And it took me a long time, a long time thinking about it. Believe me, it took me steps to get to that actual final product. And those steps in between, in some cases were years where I was stuck, where I would have conversations with, I would consider some of the smartest option derivative guys on the planet. And they had no idea what I was talking about. They were just, it's too simple. It's too simple what you're saying. But then when I asked them, well, how do you actually choose? They would go into a certain answer that I would say to them, but that doesn't make sense to someone who just thinks JP Morgan's going up next week, and how do I leverage? It didn't jive, and he sort of understood that. I mean, he obviously, these are smart people I was talking to, but we just couldn't come up. I was looking for any direction. Sometimes those steps took years. So what you are, when you look at the option chain, and now it's fairly simple, I think you have to understand it took me years and years to come up with what I did. I started my education the same. I was making the available education better. And then I just thought, this doesn't even make sense. So my initial education was sort of this souped up version of what's out there. And then I thought, it doesn't make sense. It doesn't, there's something not jiving here. And so I switched. But I think it's the best education because it relates to, it's practical. It relates to what people are trying to do and trying to accomplish. And it's explained in a way that makes sense to people. That's always what makes something great. It's when it's simple, right? It makes sense to people. And I think the highest compliment I can get is when people say to me, I can't believe this seems so simple. How is it possible that no one has put this out there? No, simple sometimes is the hardest thing to accomplish. And I can tell you that what I've done has not been done in 50 years. And there are some of the smartest guys in the planet that are looking at this on a day-to-day basis, and they don't know the answer. I have conversations with experts, and I'm always pushing them. How do you answer that? How, because they say, it's almost a backhanded compliment. Like, yeah, what you're doing is nice, simple, but nice, well, if it's so simple, how about you tell me the answer? And, and I challenge people and I do it in a playful way. I'm not trying to be, Mr. Know-it-all, but I'm excited because it's something new. I think it's the next phase. So it's the best education, in my opinion, because I created it and because I spent so much time on it and because it makes sense to the average person and because of the reaction that I get from people that say they love it. They're learning for the first time. They understand. So that's the education. That's just the option chain. What I then did is created this game around the unusual options activity and help people build a plan to play this game. It's a probability game. I like games. I like puzzles. And so the strategy, the process of finding the ideas are a game. You're being a detective. I like watching detective shows. So I'm always curious to try to find an answer, and we're trying to find an answer using clues, and then we're playing the game within a framework that tries to capture mathematical edge. The edge is in the picking, in the picking, and also in the strategy and how we extract that. Now, for each person, Marco might be different than the next person. The strategy is going to be different. Stop loss is going to be different. How you enter is going to be different, and all those things. And there's a lot to go on, and I will answer all your questions over time on that. But the process, how you actually use the tools to get an idea, go from I don't know anything today to I have 4 ideas that are pretty interesting to look at. How do we do that in a few minutes? How do we do that over a podcast where we could just say, I'm going to look at the board. It's fresh. It's live. And let's just try to figure out what ideas do I want to look at? I want to show that process. I want people to understand that these are the best ideas in the world. Now we have to narrow it down and figure out which ones are the best of the best, right? This is where the smartest guys are thinking the leverage is at. Let's try to narrow it down to a few. All right.
Yeah. And now that you mentioned it, why don't we actually go
All
ahead?
right, let's try to do it. Okay. So let's just go right to it. So the options board here. So unusual options activity board we have here. I am looking at, again, what's most important. We're going to keep saying this over and over. What's most important? I need to find buyers. Okay. Opening buyers. I would like to find opening buyers of contracts. Okay. That means, if the open interest is higher than the volume, then I'm not completely confident. I'm trying not to guess 20 times. I'm trying to guess only a few times. The less guesses I can make, the better chance that my analysis is correct in finding a pool of buyers. So it's very important that we find buyers. Now, how do we find buyers? Okay. So I choose IV up because we want the implied volatility to be higher. Implied volatility higher simply means that the board, okay, the options board, the options chain prices are up, okay, in general. right? This IV change, we're looking, this is a 1 month change. So it's not always going to be exactly correct, but it's going to be in general, right? The board is going up in cost. Okay. I'm looking at volume, seeing how much volume change. So I click on, so we could start at all, and then I'll click on the implied volume. I could click on all this stuff, but I won't to start. And you can click on stock. Right now, the board is all stock. I haven't added the ETF, so I want to. I'm just not sure if it just clouds everything. So you can do all or stock. I will just, my first look is always to start at the volume, highest volume. I see some names here. Okay. I also have all these are positive, up, up, up. You see some of them are just 1.1. That's one vol point. So if the implied vol is 49.5, then this is up small, up small. But this one's up pretty big, which is AMC, but it's only a $3.30 stock. Probably just by looking at it, the stock's at 50%. Puts, calls, people look like, so let's read this. Let's just read this one real quick. AMC stock is 330. It's down 62 cents, which is 15%. It's a small cap name, earnings in February. 138,000 options. There's more calls than puts trading. This is only going to be at the end. The RV is only going to be at the end generally. The IV is 180 and it's plus 24. First of all, when you get that high, plus 24 is almost not even that much. It's about 10%. But you know, either way, it's up 24.8 vol points. Okay. And the way I look at it is stocks down. If I had to guess, more calls are trading. Probably people will long calls because they thought the movie theaters were going to be open. So more calls and puts, people are likely selling their calls, more calls and puts. So I'm not even gonna look at it. It's $3. This is an option. $3.30 is an option already. I don't need to put an option on an option, so I don't do that. I'm looking here down the line. Let's just look at Amazon. We can say Amazon is up $55, up almost 2%. Volume is 200,000. That's a decent amount for Amazon. Calls versus puts is double. IV is only up a little bit. So I'd like to see why it's only up a little bit or what's actually happening there. So I'll just go to Amazon and I'll look down at this row. It looks like a lot of it's being traded in the front month options. Okay. So here's the stock front month options. Here's 3,200, 12,000 of these. That's interesting a little bit. You know, I'm looking at that because the open interest is only 6,800. So either someone's buying these or, you know, why would they be buying them for this week, December 18th? I'm not sure. But this is a little bit interesting. Now, the problem is with these large stocks, one option costs $3,000, 30 times 100. So for the average investor, usually this isn't a great place to be. You know, it's too big of a game, if you will. Okay. The Amazon January's, just to see where January 15th, if I see anything, some put buying down here. Okay. Obviously it's going to be after Christmas. And that's it, just sporadic all around here, 3,400. Okay, so sporadic, but I don't see this change in the volatility, so I'm not super excited. I like to see the board expanding. Okay, yes, the prices are higher, but somebody's paying those higher prices, and they don't care about the fact that the board is expanding. They want the option. So this is what I care to see. I'd like to see a little bit more positive. So let's get out of that one. Let's get back here. You look at Intel. Okay, stocks up $1, up 2%, large cap, a lot of stock, a lot of options, and again, not a lot of movement in the board. So I do want to see what exactly is going on here real quick in Intel, just because Intel's kind of been a dog for so long. Let's just look at this is a bigger picture. I guess we can look at it here too. You know, you look from here, it's just been a dog for a while. Okay, but people are coming after the name here, 51.5. This is 1 week options. I generally don't like 1 week options. I just don't think it's a crapshoot. And usually the top guys in the world are setting up for something as opposed to trying to just take, you know, super cheap shots. Not all the time, but it just becomes hard to guess, and it's a much faster game. So if you're going to play, Marco, if you're going to play 1 week options, 2 week options, 1 month options, you might want to reduce the size simply because a lot of these options you're not going to be able to get your stop. So it's going to be a lot of times it's either zero, the stock moves down $2. It's either 0 or 100% or close to that. So when you're trying to stop loss at 50%,
it doesn't really work.
It's harder. It's harder. It's harder. It's just harder. It's fast. The game is a lot faster.
It's more like a day trader type of game
mentality. It's just the game is a lot. You're on a faster roller coaster here. Okay, faster roller coaster here. So I'm looking at January, and January's. I don't see much. Not in this stuff. So I'm not even going to look anything around what I'm showing here. I'm showing a range of probabilities between 10 and I'm sorry, I think it's 5 and 95%. So, you know, I if it's not there, then it's something different going on, you know, something that's out of, we shouldn't really care about it, to be honest. So the January's we checked, February's, January see 50 options going through, some puts as well. I mean, nothing super exciting in a name that could absorb significant amount of options. So again, nothing there. And like a detective, I will tell you that, you know, the day could be, you know, you're looking and searching and you're going to find a lot of nothings, a lot of situations where it's not telling you anything. Let's look at Rocket. Rocket, we talked about last week. There's something going on. Likely people are coming in to buy calls. There was in the earnings announcement last week. I'm sorry, a few weeks back, the last earnings announcement, the CEO basically said he was excited about some announcement that he was going to talk about in the new year. They were very excited about it. Who knows? Maybe that announcement's coming a little bit earlier than thought. The stock has been trading well. I can tell you again, like it's the same story. It's nothing new here, but they're still coming for these calls, and you know, it's a positive development. You know, the stock is. I wouldn't say the stock is cheap. I would say that perhaps where it can go as a fintech stock, it would be cheap. As just a mortgage originator, it's not. It's probably not cheap. Okay, you look at the other names. There's a lot of cheap names, but what they have going for themselves, AI and hiring, you know, $500 million worth of technologists, you know, they're doing something special here, and I think over time we will see the results. The problem is, and I brought this up, and I got a lot of feedback and questions on it, was, you know, no one wants to make Dan Gilbert. Nobody wakes up and says, I want to make Dan Gilbert, the CEO, the owner of Rocket. Nobody says, I want to make Dan Gilbert, you know, he's already a billionaire, a multi-billionaire. You know, people want to make money. You know, someone like BlackRock says, you know what, I don't know if they own it or not, but someone with a lot of money that could buy the stock and push it is going to say, I need stock. You need to give me stock at a good price. Maybe you could do a secondary. I don't know if that's the cure, or maybe they have, you know, good enough announcements that push the stock. But really, what pushes stocks is, you know, BlackRock, Vanguard, the big guys getting in, and I'm not sure they have that support, if you will, from that community, simply because there's not enough stock to buy. Right? There's not enough stock to buy. If BlackRock wants to get in, they got to own, you know, X percentage of the float, which it may be too big for them. Okay, so the point is that there's been volumes coming in. It's been positive flow for a week now. I'm sure somebody's heard something, or there's something going on. It's just there's a research. I don't know, but something is going on here that this just got as active as it has. Maybe there's more buyback announcement. I don't know. But this is something to take a look at. We like the name Rocket, Netflix, DBX. DBX, another name that we like. The stock is up on rumors of they're the next buyout, or at least there was a report saying that them and MongoDB, I don't even know what to do, but DBX will be one that potentially could get bought. I think it's. Now that the stock is up, I'll mention it a little bit here, you know, for everyone. But, you know, when I'm looking at a stock and I see, you know, they were literally buying calls here, you know, it was like they were coming after him. And, you know, when I see that, you know, the first day it's, you know, you're looking at this chart, doesn't look great. And someone's buying calls and it's just, you know, I make a note of it. The second day, someone buys calls again and it's more notes. And then the third day they come back and they, okay, once, twice, three times. Okay, I get it. Somebody's setting up for a big move. So we actually bought some calls here. But I want to add to the story, to why. It wasn't just because, it's never just because there's 3 buyers, there's 3 days of buyers of the options. That is a good reason.
Mhm.
It's never the only reason. What I'm looking at here is a chart that is to me, it's interesting. Go back 3 years. Basically, I knew this company as someone that just stores my file in the cloud. I would just,
Right.
I didn't think anything else of it. And I thought, okay, they're in super competition with all the big guys. But once I saw the buyer right around here, I thought to myself, let me go look a little bit. Let me take a look, right?
Mhm.
And, it turns out that they do have this sort of workspace enterprise. They're dealing with corporations, not just the average investor or the average person. And they have something potentially going on there, and they would benefit from people working at home, people using the computers a lot and storing more and more files. What I did look at was a chart with the top 15 players, and the top players were the Apples and Microsoft's CRM, everybody you would expect. And number 15 was Dropbox.
Mhm.
I mean, even Alibaba service was there. So it's everyone you would expect in the cloud. And then it was Dropbox. And Dropbox is, $9-10 billion company. Now it's a little bit more, but, maybe $11 billion company. They're playing in the pond with the big boys, and they're 15. So if somebody wants to get up, and Apple and Microsoft are clearly in the lead, but if you want to climb that list, an easy way to climb that list might be just to buy Dropbox,
Mhm.
right? That's what they're trying to do. They're trying
They
to
have
get
a lot of
to the top of the
users.
list.
Mhm.
And they have a lot of users, 300 million users, 15 million enterprise users. So I thought, I don't like the chart here, but I see somebody setting up, and then I see this story, and then that chart, that visual really said to me, maybe there's an opportunity for someone to buy them. And when you think about it, maybe it's Microsoft or Apple, but also maybe it's Google, right? When you think about a workspace and you think about what Slack, I tend to use Slack work. They're putting all these apps for me that makes it easy for me to use their workspace. Well, Dropbox is doing a similar thing. And what if, so they have the technologists that are there that are building this stuff. What if Google says, why don't we go get those 300 million users that are registered plus the 15 million users that have enterprise, and we can immediately, it's a drop in a bucket for Google. We could immediately basically use their technologists and use their expertise in building this platform and take how many apps does Google have that nobody uses? A lot, right? A lot. And so why not take all the Google apps, have a team that they can buy who's already been building a workspace, and say, hey, connect this, make this the Google app, make this, Microsoft has Teams. How come Google doesn't have something, right?
Mhm.
How come, Google could then actually, with the Teams, with this workspace, add in their whole advertising, and who knows how they could do it or drum up ideas for that. So, I just thought it was not only, in this case, it was not only the options flow, it wasn't even the chart. See, this chart is actually not great, although with a little bit of vision, I was trying to do this toilet bowl kind of thing where you look at it this way, and then it started moving up, and you see this, it's like the slants are starting to come up, and maybe you get this toilet bowl move up over the next 3-4 months. You see that?
Yep.
Okay. So with a little bit of vision, I was trying to be positive, and I was saying, okay, let me see if this thing could break out to 22, 23, 24, maybe it starts changing the dynamic of how people are looking at this thing. Now, this is a big level, 24. You see that level there?
Yep.
It's a big level. There's a good volumes here. So again, I keep it simple, stupid. 24 is a big level. It's having trouble there today. We'll see how it reacts over the next couple of days. But that is, pulling the trigger on one is always the difficult choice that you got to make. Now, let's take a look at our favorite, DraftKings, which, I'm looking at DraftKings and Penn,
Mhm.
and we have a lot of calls on, so I needed to spread out some of that risk at OptionsGeek. So I'm trying to find names that I think could have some downside. Not saying that the market's going to crash or anything like that. I'm just simply saying you just can't have all calls. I won't have all calls on.
Right.
I'm always trying to I go to bed thinking, what happens if the market's down 5% tomorrow? When I wake up, it's 5%. It's, you're not going to have a chance. And so something like DraftKings, I'm looking at and I'm saying, okay, stock, it's overvalued is, who knows what overvalued means? It could be whatever. I get some pushback when I maybe even infer that this stock might be overvalued, but the reality is on fundamental metrics, it's overvalued. It's trading at some high percentage on I think it's 10 times sales in 2025, even not even today. It could be overvalued, but who knows? Overvalued could be, this stock could go to 100, 200, 300 and still be overvalued. That doesn't necessarily tell you the complete story or give you full reason to short it, because you have Amazon and Tesla that have blown that hypothesis away that you can just short overvalued stocks. They could be overvalued forever until they grow into it in 15 years. So we have a stock here that had a short move down up. And yeah, I mean, I'm looking for names like this where if it goes down, I think, and people stop loving these, 10, 15 times sales in the next 5 years, I think you can get some real downdraft in these names. Does it happen when? I don't know. That I don't know. Right. But what's more annoying is that I'm looking at this pen, and the pen is a name that was actually up at 85, 84 something today. It was $5 higher. I don't even know why it's up, except that it has been breaking out this level 75. So I've been watching it, and it is probably some volume. I saw some volume today. Looks like here. Actually, let's start with the unusual options and see pen here. So 79.91, stocks up 5.5%, 7.5%. Calls, puts. You can't see me. Can you see me? No.
No.
Okay, hold on 1 second. Hold on. Yep. I'm gonna close this. I'm gonna go back. How about now?
Yeah, now you're good. Yep.
Good. Okay, so we go back to here.
UA,
okay. Yeah. I want to go to UA. Sorry. So I'm looking at pen. I want to read the line, right? Because I don't necessarily need to go into every single one. There's a lot. There's 78 right now to go through. I don't need to go through every single one. I need to actually be able to read this board and find the ones that I think might be a little bit juicier than others. So pen is up $5, 7.5%. The volume is 57,000. There's more calls than puts trading. That doesn't tell me anything. The IV is 75, and it's actually flat. It's actually flat. So what does that mean? Doesn't excite me. This excites me that it's up, and I would think that more people are reaching for calls, maybe, or maybe they already have calls and they are selling them. And so let's see. Let's go over here. So pen. So here's 37,000 calls. What's trading? In the 1 week options, you have open interest of the 80. So 8,000 there. I'm not sure if that's for sale, even though this is showing up 12 points. So maybe this is to buy, or maybe the 80 calls were for sale last week, meaning they were doing an overwrite, because of course pen can't go up $10 in one day in the last week. So I'm going to sell calls, and then the stock opens up at 85, and then people are scrambling, and these are getting blown up. These are also perhaps might have been calls that were for sale, and at 85 they were up huge, and so people are covering. So these might be people covering. You see how this front month is up, but you have a situation where the stock was up significantly, and then these were the stock's up significantly, and implied volatility is up, while everything else is not really up. It shows you that they just I don't want to say panicked, but there was quick buying here in December, and it coincides with this fast move this morning to 85, or this move all the way up to 85, and then people buying maybe in a little bit of panic because they moved this up by 15%. 12 vols on 80 on a 76 is 15 to 17%. So that's what I would say. I'm not comfortable that these are all like I want to buy this because it's going to go to 90 by Friday.
Right.
I think this was panic buying off of these. This was almost like a short squeeze. So that's what I would think there. Then I have the January. I look at January 8,000 here again. A lot happening in names that I'm not going to be confident that these are all to buy just yet.
I see.
Okay, so no, I would say I like it. I still like the name. It looks like they cleared out some sellers up there. Maybe it comes back. I'm still looking at this name, but the Penn DraftKings, like Penn, not in Penn, have puts on DraftKings and just waiting. I think that's a waiting game. But it's there to protect. It's there to protect. Let's see, one more thing. It's there to protect sort of portfolio. One last name to give everyone what we're looking at today. Actually, I'll leave you with Marco a couple to look at, but let's look at net. I was looking at net earlier today. It looks like there's some activity there. It goes back into the sort of the cloud, but it looked like they were buying. So here the stock was up earlier today, and there was call options activity in December, January. So we have a little bit of a turnaround here. Something to look at. They were buying the 85s. This is December, January, and February options. They were buying the 90s, 95s, 100s. I'm looking at that. I'm also looking at this. I would look at this UPS and FedEx. You have earnings on Friday. How is FedEx acting? Not great, considering you would think that they would be doing extraordinary business right now because everybody's buying online. UPS is interesting because you get this earnings. FedEx and UPS trade close. I think people are doing that right here. They're trying to buy some calls here because you get, if FedEx is up on December on the Thursday, December 17th, it's likely, which is Friday trading, it's like a UPS. It's going to say something about UPS in the environment, so you might get some buying here. But I would say that I don't think it's trading. I don't think FedEx is trading great, although it's had a decent move. So that's UPS, FedEx. I'm watching this week. The net is being bought. That's something to look at. Penn, obviously, we mentioned last week. Apple, there's something to be said about Apple and Peloton. I'm waiting for that opportunity in trying to find seeing buyers of puts in Peloton. Haven't seen them yet, really. It's all these names are bull. Everybody wants to own them, but I think there's a bigger story there with Apple Peloton going into the new year. And I would let's stop there. But the last one I'd say is Disney. Jeez.
Right.
Well, that is just an explosive situation there. But
we should cover those tomorrow. Get back to them, man.
All right, let's do that. Yeah, let's do that. We'll talk about Disney tomorrow and some of the other things. But you got some homework to do and see if you can come up some stories on some of these other names that we're looking at by the end of the day.
Sounds good.
All right. All right. Be good, man.
Thank you.